Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the SPY and the data sets for May 13th, 2025. And with that said, let's go ahead and jump straight into the data. It'll pull up. There we go. Alright, so tomorrow, essentially, we just have the CPI in the morning. Um, that's at 8:30 in the pre-market. Now, many of the readings are expecting technically the CPI to come in a little hotter than last time since technically we did have a negative reading for the month over month. Not in the core, but just in the standard CPI. Uh, I don't really have any expectations for tomorrow. Everything's from a data perspective is telling us that we should see the CPI come in cooler, which means it should come in lower. And the reason for that is because the consumer recently has just been I wouldn't say struggling so much, but they've still been weakened. So um, kind of the same thesis as I had yesterday. We're really just waiting to see if the consumer is going to start picking up for the summer, or if they are going to, really just sit on any savings that they have. So that's really it for the data. We don't really have any earnings, as I mentioned in yesterday's video. So we'll go pretty much straight into the technical analysis from here. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And jumping straight into the TA, let's go ahead and open the daily chart and open our moving averages and Bollinger Bands. Now, I don't have anything written down. I've misplaced my notebook, so I'll find that sometime tomorrow. But let's go ahead and go over our uh, levels and everything. So, yesterday video we talked about, the upper Bollinger move and how potentially on that first day we could see above the 580, potentially all the way to the 584. Well, today we saw the 583, and that was really nice. Um, but we should still see a little bit more pushing. So with that said, the 5 mile is at 566.47, and with the market closing at 582.66, nearly a whole $15 above that right now. So it's very likely we're going to see the 5 mile pulling all the way up above the 570 range. Quite a large jump upward. Um, Pretty massive actually. That means the upper bounds of the 5 mile will be around that 572, potentially even 573, 574, depending on how high or low the 5 miles pulled at the open. Now, again, the CPI is really going to kind of dictate the day. Uh, we shouldn't really have any crazy, um, anything crazy thrown at us unless there's some sort of news announcement. But so far, everything should be going to plan. Now, I'm not really going to be going over the 10 mile right now. That's not really important. Either is the 20 mile. Um, for this video, the market's really between two levels, and that's the 5 mile and the upper Bollinger. So currently the upper Bollinger is at 583.97. So technically it is above where we are right now. However, it wasn't at 583.97 the entire trading session. This actually did breach above that level. So I do consider this a day one upper Bollinger move. However, yeah, I really do want to say this is the day one move. Upper Bollinger moves are extremely aggressive, and this was quite obviously an extremely aggressive trading session. Um, Very large move upward. So it's extremely likely we're going to see the higher highs and the day two of the upper Bollinger, which means that we could potentially see all the way up to the 580, or yeah, the 585, all the way to the 587 tomorrow, depending on again if the CPI is giving the market the reading they want or not. Now for day two upper Bollinger moves, what I look for is a higher high, so above this 583 range, and then it will usually start to pull downward towards that the end of that second session, moving into the third session. Um, so what the goal is to look for bear structure building on the day, uh, during the actual trading session. And let's just quickly take a look over this. So technically we do have the top of a very big cup here, and let's see if my drawings still have this. Yeah, so we do have a head forming here. Okay. And I just want to circle this so that you can kind of follow on the hourly chart. This is the 4-hour chart, but go ahead and follow on your hourly chart because it will be a little easier to see. Now, I did mention this in the Sunday video, but very likely we were going to see something like this happen, and that's kind of the exact same situation I'm looking for right now. I do, again, expect the higher high, and then I expect to pull down towards that right shoulder and to build into that right shoulder. Our 5 mile is all the way up in this range. So, it's really not far away from us. So essentially, the market has two directions. It can either push into that 5 mile range, or it could finish the upper Bollinger move, finish out the head of the large head and shoulders, and then move into that right shoulder, build out some liquidity in that right shoulder. I know this looks very sloppy, but this is just to give you, kind of the perspective of, what should take place. Um, so ideally we're looking for some sort of bear structure here. Head and shoulders, inverse cup, and handle. Something to suggest that this is going to pull downward. And why is this going to pull downward? Because this is both bearish liquidity and bullish liquidity. Um, the bulls and bears want the same thing here. The bulls obviously want this to build, we have the cup built. They want to build a handle now for more liquidity to push into the upper six or in the lower 600 range. The bears, however, want this handle to fully break downward. So it's kind of one of those situations where we both want the same thing, just in a different manner. So um, it's kind of what the thesis is for right now. We just need to see the structure for the day, see what the CPI gives us in the morning, and it'll really largely decide whether we see, uh, increased buying or selling. Now, in the overnight, we are currently at 580, 60. So we are technically down right now, but that doesn't really mean a whole lot when we had a 3% day yesterday. That can very, very easily be filled if we get a good CPI to print. So I don't think there's anything I missed here. Um, this is the time to, yes, let's talk about the upper Bollinger Day too. So on, going by the upper Bollinger mechanics, on day two, and I actually want to pull up my rule set. Just one moment. It's in my Discord. I just want to pull this up. Just give me 1 second, everybody. Because I want to show this on actual screen, and let me see if I can pull this up for you guys. This is the upper Bollinger mechanics that I've written out in the past. Let's see if this works. It's not gonna work very well, I don't think. Let's see, let's change the zoom. Okay, well, I'll just read it. I'll just read it. Yeah. So, upper Bollinger Mechanics. Um, Day one of the upper Bollinger is, again, look for the market price to break out of the daily upper Bollinger and hold at or above this price on close. That's exactly what happened today. We hit the upper Bollinger and we held at or above that price on close. Perfect. Day two, look for a higher high and look for a bear structure to send us downward. Exactly what I discussed. We're looking for some sort of microstructure, so a head and shoulders, an inverse cup and handle, something to suggest that the liquidity is going to break down and pulls downward. Now, when I identified the bear structure, that's when I usually take puts for 2 weeks out, and it's really, really, really key to take it for 2 weeks out because the 5 mile is generally, you know, it takes 5 trading sessions to catch back up to the 5 mile. And that's what these puts are for. These puts are to catch the consolidation back to the 5 mile area. Um, when we get back to that 5 mile area, you can choose to hedge against these puts again to create like some super straddles, or you can take profit and then set up, some new contracts on the 5 mile. But that's how I play my upper Bollinger moves. Day one, push higher highs, close at the higher highs. We did that. Day two, push for higher highs above that, and then start to see that bear structure build and slowly start to consolidate downward. Day three and four, we just see, part of that consolidation back to the 5 mile, and then, we retest the 5 mile, and then we head from there. We go either back up to the upper Bollinger or we head back down to the 20 mile. So, yeah, that's what we got going on for now. I'm gonna end the video here tonight. I think we're all pretty much in agreement what we have going on. Um, we have the upper major selling channel starting to close in on this, so this is a really good spot to start breaking down and rebuilding a handle for major liquidity to either break down or push out of this range. The ADL is at all-time highs now. That is something to be aware of. That means that buyers are starting to step in, whether that's algorithm or algorithmic buyers or actual buyers. We don't know yet. I just know that a lot of this volume is pretty weak and tapering, so we'll see. Yeah, I hope everyone has a great day today, tomorrow, whenever you're listening to this, and trade safe, and I will talk to you in Wednesday's video. Take care.